like really well. Guys, I want to start the trade review first of all with two trades. One of them is mine, one of them is not. But there is a reason why I want to start with those two trades. Let me actually make it this way before I actually start reviewing them. The thought process was similar. My trade definitely wasn't the best. Are they both clear? Let me know if they're clear. Otherwise, I'll just do one and then do the other. Zoom in a bit. Okay, I'll explain it quickly this way and then I'll zoom in and go through both trades separately, okay? I want you to focus on this part first. This part right here. Oh my god, why is it black? Yeah, okay. So look, why is it still small? Now it will be big. Okay, so this is the part which I want you to focus on. And this part here is basically this part here. Look at the entries to those two different trades. Entry here, and add here, and add with the same candle here, another add similar there was a little bit later, big partial there, big partial there, all exit here, all exit here. Do you see the similarity, guys? What I'm going on there, or what I want to explain in this is that traders, I mean a lot of traders, they kind of think alike, right? I mean the psychology behind trading, especially if you are good at reading the price action, if you know what you're doing, the idea behind is just similar. A lot of us are doing the same things or some similar things. And why do we do these things like on those certain spots? We do it because market's behavior is similar. It's just repeating itself. We get used to the market behavior, we get used to the same price action, and then we trade it accordingly. Now this trade here definitely was executed better, and I'll explain why it was executed better. So let's go separately through both of the trades, okay? I'll go through mine first quickly. I'll show you my mistakes and I'll show you what happened there. First of all, I'm longing it in the pre-market because I was long biased in this trade. And I didn't want to miss the move. At the market open, it got to my stop loss. There was a level in the pre-market a little bit earlier, which was the low of the pre-market, and it got me stopped out. I was totally fine with it. Then I'm re-entering after these double hammers. One hammer on the 1 minute chart, another hammer on the 1 minute chart, starting to get increasing volume. I'm taking it to the long side, giving it way big room because my entry here, it wasn't for an opening range breakout. When I entered on this very candle here, I wanted to get this move here. I want to get for a break of all-time high and the daily levels and get a nice trend to the upside. That was what I wanted to get. I gave it wide room and I told myself if it pulls back, I will get right there. Unfortunately, it got me stopped out at the low. I see small reverse head and shoulders pattern, taking it to the long side, giving it wide room. It's making another wave right here, which is a higher wave in comparison to that one. Adding for the break, and there is the move which I wanted to get. First partial, second partial, add at the pullback, partial, partial, W shape, add, partial, partial at the double top on a new low, and all out at the new break even after my final add. Now, what are my mistakes? Epic pin is frozen. Epic pin. Open again. Come on, don't freeze one more time on me. Okay. Now, my mistake on this trade, I think the stop loss was really wide, and once it just got into the low of the candle or the low of the hammer, I should have bailed on this trade. The second mistake, the entry in the pre-market, I think I shouldn't have held on to my original stop loss. Once it broke this level right here, I should have just simply bailed on this trade. Let's take a look at Kaiser's trade. Look at how Kaiser traded it. No entries in the pre-market because there was no actually good place to enter. There was no good confirmation. It was merely bias. I traded the pre-market only because of the bias, not because of the technicals. Look at this. same thing, double hammers right there, and Kaiser taking it to the long side. What's the difference here? The difference is I held it to my original stop loss and I got sold out here for a loser, while Kaiser took a quick partial on this pop and exited at break even. The second difference, I started initiating my position here on these small reverse head and shoulders. While Kaiser was actually patient, he waited for the pattern to get completed. Once it broke this small level up there, he's taking it to the long side. My entry was a little bit later, and then partialing all the way up. On the pullback, his ad was better than mine. I added somewhere in the middle. Another partials all the way up. Hammer. At the pullback, adding to his position, and look at this. He didn't tighten his stop loss. You could notice his exit. Eventually, the break even on both trades, mine and Kaiser's trade, was the same, around 11 or 10.9. But look at this. This ad right here didn't tighten his stop loss all the way up there. He adds to his position, sometimes on the way up, sometimes on the way down, but his average is still low to survive the pullbacks. It got him to his break even, he's bailing on the trade, and then look at this here. This is what I missed. I wasn't in front of my PC, and this is what he caught. You see this moving average, how it's holding it like 3 times. And look at this pullback. On ABCD webinar, which I did, I love pullbacks for ABCD patterns if they are 50 to 70% pullbacks. This right here is 50% pullback, or a little bit more than 50% pullback into a strong moving average, holding it. Once we had the W shape or a confirmation of the support, he's taking it to the long side, adding to his position, partial at the breakout, add to his position on the pullback, partials all the way to 1190. This is a huge drop. This is what I usually don't do because I'm not good at it yet, right? But look at this. He actually added down here as well. And I bet his average wasn't here after that ad. It would still be somewhere down there. This is how it is. He will survive big pullbacks, partialing all the way to $12. So yeah, this is really well managed and well executed trade. Yeah, exactly. So look how clean this chart is. One trade, successful. Second trade, successful. Third trade, successful, right? In my chart, one unnecessary trade in the pre-market on which I lost. Another trade which is here on which I lost as well. Then I finally caught the winner. This just shows you how good he is at trading the price action, and still have a lot to get there, right? I mean, for me. Now let's go to your trades, guys. Ivy, let's take a look at your trade. I don't know, Yardley. Alright, so let's take a look at Ivy's trade. Ivy traded beyond, and this was a 1 minute open range breakout as far as I see. Yeah, exactly, 1 minute open range breakout. Look at this. Clearly trading around VWAP. In the pre-market, it did a really huge move. Did Beyond have any good news? I honestly don't know about this one, or I didn't catch up with the news. But anyway, the gap was amazing in the pre-market. It started consolidating later in the pre-market, and I love this. This part right here, I love it a lot. I love to see that the stock is dropping down or breaking sort of a level in the pre-market, and then after the breakdown, it comes back up. This force right here is what I love for 1 minute open range breakouts, and a lot of times I don't even wait for a new 1 minute high. I would take it once it breaks back up. I want to see it going down. Once it breaks back up, that would be my entry. And if you watch on Twitter the posts which I post, a lot of open range breakouts I am taking are on the first 1 minute, and mostly the entries on the first 1 minute, they don't happen immediately with a break up. These type of entries I don't take. They first go down, then they squeeze back up. This is the confirmation which I need to see if I'm going to trade the first minute after market open. This is good patience. It did a move smaller than the average true range, $2, and we know that Beyond could move a lot. he's entering at the pullback closer to view up, which is also good. Partialing at the high, partialing more. This is a lot of partials, I think, but you got 3.5 hours, one and done for the day. Good job, Ivy. When you take partials, are you taking them at market or they are limit orders, Joe? Sometimes market, but most of the time they are limit orders. Like 90% of my partials are limit orders. Jesse, let's take a look what you did there. Hey King, good afternoon. So Jesse traded AMD, and let's take a look at the 5-minute chart first. Would definitely, okay, what do we have right here? We're having an ABCD pattern. It's black when I need it yellow, and it's yellow when I need it black. A, B, C, D. This pattern right here, I would have loved to take it to the long side, somewhere up there. It's going up, dropping down, up, down. We're having a lower high wave, then it's breaking back up. So after the breakdown right here, it doesn't continue flashing to the bottom. Right? Once I see this happening and then it's coming back up, I love it to the long side. Especially the candles here on the 5-minute chart, they're really good to the long side. Now, let's say you miss this move. It's dropping down one more time, and look at this. Same thing. It's breaking down, similar to this breakdown down here, but it doesn't flash back down. Once it's coming back up, I wouldn't honestly have taken it to the long side down here. I would have waited at least for a new 5-minute high, especially after a huge drop like this. But I see you caught it down there, and we'll take a look why I did that on the 1-minute chart, and then you are partialing all the way up. This ad was amazing, I love it. You could see that there is some sort of resting period. After this move right here, it did some sort of resting period, kind of a bull flag up here, and then it just squeezes all the way to the high of the day where you exit all of your position. Let's take a look at what you did right there. Okay, on the 1-minute chart, this is actually good. I love this tweezer bottom, right? Honestly, I'm not sure if I would have taken it. I see that there is a moving average. If this is a moving average down there, or view up maybe, drop down, reverse ABCD pattern. This is a nice hammer, but it doesn't go back up, and then it breaks down. Why would I be nervous around here taking it to the long side? Because of this point right here. I would assume that it could go up to it, bounce out of it, and then drop down. Just only a couple of candles or tweezers at the bottom are not enough. Candles are good when they're looking good, but we definitely need a little bit more confirmation. Maybe around here in the middle, I would have tried to take it to the long side, or at the break up here, I would have taken it to the long side, putting my stop loss at the half of the range, and then just have multiple ads all the way up. Right at the bottom, unless it's small share size, I wouldn't have done that, but it worked out really well. And you caught an amazing move there. Okay, let's take... did you send that second picture? Let's take a look at that. Okay, I see it. So Jesse added because of this right here at 80, 89, and 80, 82. Around 60,000 shares went there. So right here, right? Okay, so he saw on the time and sales that a couple of... oh my god, where did I pull this? Come on. 3 big orders, each of them is 20,000 shares, went through the time and sales at this area. And because of that, he added to his position. And look at this. I love it when that's happening. You are having a pattern on the 5-minute chart, which is a bull flag. Along with that, JC saw a confirmation order on the time and sales, because of which he added to his position. And that's what he got right there. So you see, only time and sales confirmation could be not enough, right? Only a pattern could not be enough. Only candle could not be enough. You need to combine that all together. I'm not looking at the SPY before taking my trades. I'm looking at the SPY when I'm building my watch list. I check which stocks are following the SPY, which stocks are independent from it. If I see that my watch list is totally independent from the SPY, then there is no reason for me to keep a close eye on the SPY. If my watch list is following the SPY, but not identically, just going with it a little bit, then I might keep an eye on the SPY. So unless it's following it, I'm not paying close attention to the SPY. You're welcome. Cows, let's see what you did. I love this type of strategy. This is exactly the way I'm journaling my trades. I have multiple time frames, one screenshot, really wide period of time frame, and then I'm saying this is also helping me to back test my strategies in the future. Just let's say I'm seeing that this price action here is happening a lot, after which it's just failing. For example, after this price action, I actually love to see breakout, but we are saying that, for example, this price action here, after it makes small breakout and then it drops down, and you want to see how often does this happen. You'll basically open your journal, you'll find all similar trades, and you'll see what's happening after this price action here, which is going to the 9, hugging it and starting for a breakout. If you see that mostly it's breaking out, you might want to adjust it and start trading to the long side. If you see that it's mostly failing out, then you might consider not entering into a trade for a breakout and wait for a failure before taking it to the short side. That's just in brief, like, what I love to do. Now, let's see what we have right there. This is good. Like, remember what I said? I usually don't take a stock on a third consecutive candle on the 5-minute chart. This right here, I wouldn't consider it the third consecutive candle. Why is that? Because this. What do we have right? What setup is this, guys? Anyone? What setup is this here? Exactly, Tyler and Lenny. This is a 3-bar play. It could be make an ABCD pattern, definitely, because the price action is moving on ABCD patterns, right? AB. On the 1-minute chart, it will be consolidation, which is a C and then a D, right? But exactly for the pattern, it is a 3-bar play. You are having a wide bar, inside it a small bar, followed by a wide bar. How is this setup here being played usually? You take it to the long side on the new high up there, stop loss at the low, and then you see how far it's going to go. Because this is a setup and this is the resting period on this setup. This will be the first candle after the breakout, second candle, and third candle. What are the best entries when you are getting into a setup? The best entries when you are getting into a setup, if you can catch them on the first candle. If you are late, it's okay to try on the second candle, but it's not the best. Third candle is what you want to avoid, because usually after 3 candles, stocks start consolidating or pulling back. In this case, it wasn't the third candle, it was the 4th candle, after which it started pulling back. Now, you enter on a new high after the consolidation. Like, this would have been the first entry, right? This is where you would have wanted to get in, but it's okay. You waited a little bit more, you get in after the consolidation. I like your patience. Now look at this. This is amazing. You survived this pullback right here. Since you were waiting, you didn't take a partial here, you decided to wait for a breakout. There is no reason to take this partial, but I see why you took it. You took it because this was the high of the day and you were afraid it might do a double top at the high of the day. It's already extended right there. This is the third candle, right? And it could just drop back down. Usually when you are getting into a breakout setup, you might want to wait for the breakout and then take the partial. Like, this was an amazing partial. This is also a great partial. Stock moved up parabolically. Like, if you draw this line here, this is parabolic, right? Doji at the high of the day, new 2-minute low, parabolic reversal. So you could exit most of your position out there, and you exit all down here. Now this is not bad. Now look at this, guys. This exit, it could be good and it could be bad. It depends on your entry. If you get your entry there, or if I see that this setup is here and I take it to the long side here, at this stage the 9 moving average is somewhere up there, I would exit a lot of my position on a new 2-minute low or a new 5-minute low, but I will not exit all of my position. I will hold on till I make sure that it's going to break the 9 on the 5-minute chart, somewhere around there, for example. Once I make sure that it's breaking it, I will exit the rest of my position, because after a huge move, especially if stock is strong, it makes a pullback to the 9 moving average and then bounces and continues the trend. This is what I noticed happening a lot. Since the entry was bad, At this stage, the non-moving average was down here, and we know that the non-moving average is just an average. It could drop down a little bit. It could wick below it, right? Which is totally normal. I wouldn't hold on to this trade. Why is that? Because it will be below my break even. Late entry means you need to manage your trade differently, and you might want to exit a little bit earlier. Early entry, it helps you surviving the pullbacks, and I'm definitely not exiting on a new 5-minute low. I will hold on to my break even. If I make sure that it's holding it, I will add to my position, and I will start partialing at breakouts of consolidations. Eventually it drops down. Look, if possible, make sure to send the picture to the off-topic chat. I'll go through it, but I might just miss it here on the main chat. B-Tang, let's see what you did. Okay, B-Tang traded NIO as well. And let's see what you saw right there. Where is the 5-minute chart? Where is the 5-minute chart? Where is the 5-minute chart? There it is, the 5-minute chart. This is the 3-bar play, right, guys? Now, this is where I wouldn't have entered. This is actually not bad as well. It's good and bad. This is the third consecutive candle. But what I like about your entry is that you didn't enter at the highs or at the breakouts. Usually after 1, 2, 3 consecutive candles, I could expect a pullback to be happening. If you are entering within the second candle, and that's what happened here, within the second candle, we know that it could still make a third candle where you could take your partial at, right? But yeah, you didn't actually take it to the long side, you took it to the short side. All right, let's take a look at what you did right there. Stock is breaking up, extended from the 9 moving average on the 5-minute chart, 2-minute doji or reverse hammer. You are taking it to the short side, it's going a little bit on your favor, this doesn't work out, and you're exiting the rest at break even or closer to break even. So, which is smart. You don't want to let those go against you, especially if you see that they are not ready. Again, at the high of the day, which is here, it is really extended from the 9-moving average on the 5-minute chart, right? Only by vision, if you just look at it this way, it is extended from the 9-moving average on the 5-minute chart. New 2-minute low, which is your short. Stop loss somewhere up there or up here. I would put it honestly up here. Once it started to go in your favor, you are starting to take partials. How much did you get on this short, Ars? I would have held on for a bigger move, right? Look at this. Remember the webinar? The first partial is closer to the 5-minute low because sometimes they get closer to the 5-minute low, not breaking it. Then they're making an engulfing down here, which is a bearish engulfing sandwich, and then they're breaking out. Just to prevent ourselves from getting stuck into this setup up here, we need to take partial closer to the 5-minute low. The moment it's making a new 5-minute low, it would go to the 9-moving average in the 5-minute chart, and this is the setup here. Bullish engulfing sandwich, which is a breakout setup. Once it's breaking down, it's going to the 9-moving average on the 5-minute chart. On the 1-minute chart, it did an engulfing there. Okay, I like how you exited this trade. You see that it's clearly hugging the 9 on the 1, trying to curl and break back up. You didn't hold for your max loss and you just decided to exit on it. No need to make it a loser out of a good trade. Then you are re-entering one more time, and this one worked out well. So yeah, remember when you're getting into reversals, whether they are extreme reversals, whether they are parabolic reversals, you will have a lot of supports, you will have a lot of moving averages on all the time frames against you. You're going against the trend, and against the trend, it's normal to have a lot of levels against you, a lot of moving average against you. You can just do nothing about that, right? There will be no trade which you take with a little support below you. So just analyze the price action closely, and like you did right here, if it's still going in your favor, just let it go. If it's not, you could bail either earlier or for a small winner. Edwin, let's see what you did. You're welcome. Edwin traded MU. Now, was this long or short, Edwin? I see it was a short. It was a short. Now, let's look at the... Okay. Now, this right here was a consolidation. Right? Yeah, it was a short. Look at this. Now, this is what I usually recommend when we're trading those parabolic reversals. You want to trade it either on the second big 5-minute candle, if the 5-minute candles are so big, or third average 5-minute candle. Why is that? Because after a breakout, stocks tend to run. Right? You can't force a short as soon as possible. And I see it would have worked out eventually. But look at this. This is the consolidation area. You're having a bull flag right here. This is the breakout. You see the volume? This is what I call an igniting volume. After breakout, it just breaks out with volume. And I don't love going against igniting volume. Usually I expect that after an igniting volume, it could make another run up. What you want to see, look at this. It's 2 minutes, another 2 minutes, and another 2 minutes. Basically 1 5-minute candle. 1 5-minute candle. And you're shorting it on the very second candle. So you are trying to catch a reversal or a parabolic reversal all the way to the 9-moving average in the 5-minute chart. And where is the 9-moving average in the 5-minute chart? At 50-40. Where is 50-40? Inside the range. So you are trying to catch a reversal to force a stock to go inside the range right after it broke out. 4 minutes after the breakout, you are trying to get it inside the range for the reversal. How likely could that happen? It did happen. But how often will that happen? Right? In this case, you want it to run so far from the breakout area. And that's why I go for 3 candles at least, or 2 very big candles, so that the 9-moving average stays somewhere up there and you could get a realistic pullback before a continuation of this trend. Does that make sense? Okay, perfect. It is the 4th green candle, but it's for 5-minute extended candles, right? Yeah, it's for 5-minute extended candles. No, look at the 9-moving average, right? Here it was a consolidation area. Like right here, it was a consolidation area, right? It might have been 1, 2, 3, 4, 5, a 5-minute opening range breakout. And then a run. Like if you look at this week right here, it's exactly at the 9 to 5 along with a breakout on the 1-minute chart. Don't go strict for 1 or 3 candles. If the candles or the beginning candles are small, this is just the beginning of the move. Right when it just ignites and spikes up, this is the beginning of the move, and this is where you should start paying attention to. Just try to visualize it, combine all the time frames together, and you could see right here actually, this is what I love on breakouts, on any kind of breakout, whether it's the first minute, whether it's the break of the high of the day, whether it's on ascending triangles, on any breakout. I love to see this shakeout candle when it's setting up in a tighter and tighter and tighter range, then it drops down, and I bet if anyone who is not enough experienced or someone who is not really confident with the setup, they will get stopped out on this candle. This candle right here, if you are long anywhere here for the break of the high of the day, it will get you stopped out and then it will run without you. This used to happen a lot to me until I actually started making sense of this candle. And sometimes I'll still get stopped out on it, but the moment I see that it's coming back up 100%, I'm re-entering. This right here is meant to get us stopped out, and then it's going back up. I love to see it going against me, then going in my favor. I'll get to that, Edwin, right after this trade. Lenny, the first trade was short, the second trade I went long. Okay, let's take a look at the daily chart. The daily chart on the KNG is amazing, right? You see that it's sort of trending to the upside, it's at all-time high, or after the breakout it will be at all-time high, right after this breakout. So definitely I'm kind of more long biased into this thing, especially knowing how much it could go when it's breaking out. On the 5-minute chart in the pre-market, you can't really determine what direction it would go to. It could go to the long side, and it could go to the short side, dropping back down, right? Basically, the pre-market is not telling you anything right there. Looking at the moving averages in the pre-market, they're all lined up. And why are they lined up? They're lined up because the price action in the pre-market was just basically going sideways. When I see that the moving averages are just going sideways, I would be either long bias on it or either short bias. Both could work out. If you take it to the short side at the break, you're going with the direction, right, of the moving averages. They're all above you. There is no support below you. So you basically could short it, hope to get to the previous day close. Why is that? Because we know how the candles are being traded at. It could go all the way closer to the low of the day, not make a new low, and then break up, right? If it goes above the moving averages, you could just simply trade it to the long side. Now let's go to the 1 minute chart. The 1 minute chart is definitely looking for a short, right? This is the candle which I love for an opinion range breakout. It gets engulfed on the second candle, doji below the 200 moving average. You see how all the moving averages are above you, which is good to the short side. Now it's breaking down. On the 5 minute chart, it looks good for a short. On the 1 minute chart, it looks good for a short. Lenny is taking it for a breakdown, but unfortunately it gets him subbed out. Nothing bad about this setup, it just didn't work out. After that, he's taking his position to the long side. Now sometimes flipping is a bad thing. Flipping is a bad thing if it's coming out of an impulse. If you just simply flip your position because it didn't work to one direction and you think that it will work to another direction, this is something you might want to avoid, right? If you see that there is a setup, and here there was definitely a setup, you could just flip even on the first minute if you think that it was good. So make sure to flip your positions only if you believe that there is a setup forming in your favor. And look at this. What's the setup here? Hammer on the 5 minute chart with a huge buying pressure. New 5 minute high. What is this? This is a 5 minute open range breakout above view up, above all the moving averages, after a hammer on the 1 minute chart at the break of it and at the break of the high of the day for this moment, and then partialing all the way up, exiting the rest at break even. So yeah, this was amazing. Good job, Lenny. So you're taking it to the long side. Okay, I see that. Now this trade here, it's not bad. Let me actually give me 1 second to fix something there. Okay, perfect. This ad right here, it's not bad, but you need to make sure your stop loss is technical. And I'll share with you something now, okay? In a second. Actually, I'll share it in a second. Look at this. How you see where the 9 moving average is? We know that stocks, they could go back to the 9 moving average and then make the run to the upside. This is happening a lot, right? In this case, if I take a position to the long side, somewhere up there, I will make sure to give it enough room to the 9 moving average on the 5 minute chart. If you don't do that, it could work out. At the same time, it could fail. Let me share with you one trade I did, and hopefully it will make sense. It's the same trade actually. I need to pop this out. Look at this. DKNG, we had the same trade. I actually started taking it in the pre-market because I was a long bias. I got subbed out and I get the very same entry you got right there to the long side, partialing all the way up. It's dropping down. I add to my position, add one more time to my position, and look at this. Despite I added here and I added here, I didn't get subbed out here. Why didn't I get subbed out there? Because I knew that it could go back to the 9 moving average in the 5 minute chart. This is happening a lot. And to survive those pullbacks, I make sure to have the technical stop loss, the stop loss which is holding the price action a lot of time, right? Then I'm adding in for the breakout, partialing, and exiting. You see where? I see that it's actually going below the 9 moving average in the 5 minute chart. It's getting to my break-even point, and now it's more likely to just fail. Right here, it wasn't still likely to fail. Let's get back there. Did that make sense? So if you are entering when it's far from the 9 and the 5, you might want to give it some room just in case. And remember, you can always add. We don't want to have wide stop losses for one reason. We want to get to the 2 to 1 faster. But sometimes we have to widen them just to survive the pullbacks. Mick, let's see what you did there. Let me actually move that there. Open, where is it? That there, and okay, perfect. So Mick traded plug You took it to the short side. At first, short side one more time, which kind of worked out. Short side a third time. Now I want you to pay attention just to the 9 moving average on the 5-minute chart, okay? I like that you tried it for a reversal, not for a short. But look at this. This is the first candle, second, third, fourth, right? It's something we like. We usually expect that after 3-4 consecutive candles, stock will start pulling back. But look at this. Those candles, first of all, they were small. The second thing, they were not so extended from the 9 and the 5. Look at this. It's around 10 cents move, right? Between the stock and the 9 and the 5, it's 10 cents. Yes, there is a gap between the candle and the 9, between the candle and the 9, between the candle and the 9, but it's you can't expect the stock to fill that gap and go literally to the 9 and the 5. Remember that we said that the 9 moving average on the 5-minute chart is an average. Stocks, they could either bounce out of it, they could get just simply closer to it, similar to what happened here, right? They will get closer to it and then break out, or they could penetrate it and then pull back. If there is a distance of 10 cents between your entry and the 9 and the 5, and it makes a 5 cents move to get just closer and then bounce out of it, that's not a good risk to reward. You want stock to be enough extended from the 9 and the 5. Like right here, it was enough extended. Between your entry and the 9 and the 5, there are 15 cents. 15 or maybe more than 15 cents, right? Let's take a look at the 1-minute chart. First of all, right here, if you go for a move of 5 cents, having a stop loss of 4 cents or 3 cents, it's not a good risk to reward, right? On this entry right here, it still didn't even make a new 1-minute low on a bullish candle. So this entry, this was tolerable, it was decent, but again, it was on a bigger lower wick, right? Bigger lower wick, which you don't want to take, and it was on an engulfing candle, which is messing up the risk to reward, especially that the stock is close to the 9 moving average in the 5-minute chart. Here, no 1-minute low at all, which is something you might want to avoid. Here, it was decent in comparison to this trade and this trade. It was good. That's why you need to be patient. You're having a hammer at the half of the day, followed by a doji. Remember what we said? If you have a hammer followed by a reverse hammer, or you're having a doji followed by a reverse hammer, or maybe you're having I don't know, a hammer followed by a doji, those are good candles because you're seeing buying pressure at the beginning, then following by an indecision candle or selling pressure. So this was the most decent out of the previous 2 entries. Still, I wouldn't have taken it because the risk to reward right there was still actually the risk to reward here was decent. Yeah, here it was decent. Now, you see, at least in this case, you were able to take some partials before it went into your break even. It didn't go to the 9 and the 5. And this is what could have happened here. If the setup was good, right? It will just get closer to it and bounce. You can't always hope that it will go literally to the 9 moving average on the 5-minute chart. Now, this is amazing. You see this candle? At the half of the day, shooting star, bouncing off a daily level I see right there. New 1-minute low, tight stop loss, and you are getting an amazing move out of it. This is what you need to wait for. These type of candles at the half of the day, these type of candles at the half of the day. If they are not giving you a good candle or reversal candle like they did here and here, just let them go. Don't worry about it. You'll catch another setup. It's better to just let it run without you rather than forcing it multiple times when it's not ready, because you had -2 hours which shouldn't have been there, right? But I use the montage to add. I try to use math just to make sure my ads don't ruin my average. I don't use a hotkey to add. Yeah, that happens, Meek. Don't worry about it. So, Alisa, let's see what you did right there. So, Alisa traded SRNA, and that was a pre-market trade. Yeah, add manually. So look at these guys. In the pre-market, you're having she drew a resistance area from before, which acted right there as a support. It went up to view up, dropped down all the way to the support area, wicking and closing every time above the support area, where she took it to the long side. This is a support and resistance play, trying to get the entry as close as possible to the support and taking the partials as close as possible to the resistance, right? Now this is good. If you guys want to play the range, make sure to buy as close as possible to the support, sell as close as possible to the resistance, right? You don't want to get in somewhere here or get somewhere up there for the close of the breakout. Within the range, play the range. At the break of the range, you could just play the breaks of the range and put your stop losses at the middle of the range. Good job, Alisa. And mind to share why you add manual instead of using a hotkey? Marcus, because when I'm adding manually, I can decide where to put my stop loss at. Sometimes I want to add heavily. Sometimes I want to add small adds. And a hotkey will not do that for me. A hotkey will make it always fixed and calculated to the same risk. So it will either put my stop loss at break even. It will either, I don't know, make a small ad, the same ad over and over. My ads are just different. Sometimes I take full position, a new full position inside with new risk, so that even my winner could turn out into loser if it fails. But if I'm so sure about it, I add heavily and then go for the breakout. If I'm not sure about it, or I just want to go for the trend, my ads will be so small so that I can survive the pullbacks. Yeah, it could be just small ad, it could be so big, it could be depending on the trade. And why the middle of the range, not the bottom? Do you not get subbed out? No, I think, I'm not sure if I explained it well or not. Let's assume that this is the range, okay? Stock is trading within this range. Okay? It's clearly that the stock is having a resistance there, a support there. If you are taking this thing to the long side, you either take it as close as possible to the support to manage your risk to reward well, right? And your target is the high if you are playing the range. If you want to play the breakout, you take it anywhere, for example, as close as possible to the support, which is the best entry you could get, or let's say you are taking it somewhere in the middle. No matter where you are taking it to the long side, whether it is here or here or here, your stop loss is the low of the range. As long as it's holding within the range, your stop loss is the low of the range. The moment it's breaking the range, there is no reason to have your stop loss at the low of the range. That's in my opinion. Because after the break of the range, we don't want to see a stock dropping back down inside the range. This is a weak sign. This is showing you that the stock is not strong. After the break of the range, you want it to either shoot up or pull back, respect the previous resistance and bounce out of it. Sometimes it will get a little bit inside the range and then go back up. This is why I give it a room of half of the range. Raul, we don't mention the number of share sizes or the amount of money we made here. For a specific reason, that's not the goal, right? We just go through the trades. The idea, someone could risk $10 or they could risk $1,000. It doesn't matter how much you're making out of it. It doesn't show your experience, right? It's just how well you executed the trade. The stop loss is the low of this support area. Basically, I bet the stop loss was down here, right? Yeah. The low of the candle. All right, OTC. Let's see what you did there. Yeah, that was the best stop loss. It was the level which actually bounced, from which the stock actually bounced. Now let's see what you did, OTC there. Traded AMD, and let's see how you traded it. You took it to the long side and you got stopped out, and then you're taking to, yeah, look at this. This is it. The 9 moving average. Remember, when you're taking a stock to the long side at the beginning, even if you see that this is the level where it actually bounced from, just give it a little bit more room, right? Just in case, give it a little bit more room, because we know that they could pull back to the 9 and the 5. Oh, not the 9. This is the 9. Okay, you actually gave it enough room, I see. What is this purple line? Can you tell me? I'm not sure if OTC is here. The purple line is view up, and this down here, I assume this is the 9, right? Or you don't use the 9? It's kind of weird. It looks like the 9 to me. Yeah, it's the 9 moving average. Okay, so yeah, I think this is not a bad stop loss. Yeah, your stop loss wasn't really bad. Drop down, W shape, 50% pullback, right? It's getting you subbed out, unfortunately, which actually happens. This is totally fine. Then you see that it's, remember guys, we actually talked about this trade at the beginning. When it broke down, but didn't sell off and came back up. I don't remember whose trade was it when they took it to the long side. Was it Bitang or who took it at the beginning? I think it wasn't Bitang. It was who's, come on, let me remember. I'm not remembering, I'm cheating. I'm trying to get to the off-topic chat. So help me here. Okay, this guy. All right, Jesse, thank you. So yeah, Jesse took it to the long side here. Somewhere there to the long side and added right there. This is also perfect step. This is an ABCD pattern right here. It did break down, but it didn't get sold off. Came back up, taking it for the breakout. This is a perfect ABCD pattern. Stop loss could be somewhere down here, and here is the risk to reward. This is amazing. Good job, OTC. Kyle, let's see what you have taken there. So Kyle traded Apple, and this was a long for you. Now this is not something I would have traded, especially not this way, for one reason. This here is the 3-bar play, right? No, the first entry was totally fine, and I think the stop loss was also technical. You got into that shakeout, but you re-entered, which was the most important thing. So this is the first bar, second, which is small, third bar, which is breaking down, right? This right here is a 3-bar play, and I personally wouldn't go against a setup like this, but I see that you took it to the long side, and it did get you subbed out. Yeah, why did you get subbed out so early? And that's what I actually was just explaining right now. The setup is not ready here. First of all, you want to see at least 2 or 3 consecutive 5-minute candles. Down here, you're having 2 candles, right? And the first is decent, the second one is big. You're having a hammer at the low of the day. Let's say you're taking it to the long side here. I personally wouldn't take it to the long here. Yes, it is parabolic. Yes, it is extended from the 9 on the 5-minute chart. Not enough, but let's say it is extended 114.60, a decent move right there. But it's not the setup. I want to see either 2 big 5-minute candles or 3 small 5-minute candles. The next time here, it's forming another step. Now, this will be considered, in my opinion, first candle. I want to see a second and then a third candle to take it to a parabolic reversal. That didn't happen, so I would avoid these entries down here. This entry is a good long right here, but now it's not a parabolic reversal. Now it's an extreme reversal. I bet you'll have a new 15-minute high looking at this. This is the 10 o'clock mark, right? So this right here will be a 15-minute candle. This right here will be a new 15-minute high. You'll have a cross of the moving averages. You see this curling to the upside price action. So yeah, this would be somewhere kind of an extreme reversal with a target of view up, but this wouldn't be a parabolic reversal at this stage. I wouldn't trade this thing for a parabolic reversal. Walid, what did you have there? You're welcome. So Walid traded BA, and let's take a look at BA. First of all, the daily chart. The daily chart could go to either direction, right? You're having a strong moving average up there. You're having a room for it to go to the bottom side. So it could either shoot up to that moving average. If we are lucky, it will break it, or it could just drop down closer to the low of the 1-minute candle. Now let's take a look at the 30-minute chart. The 30-minute chart, we're having a new 30-minute high, which is good for a quick scalp all the way to that moving average, right? The 15-minute chart looks extended to me, but we'll take a look at the 5-minute chart right now. We see that there is room up there, which is also a good thing. The 5-minute chart, you're having a 3-bar play right here. I definitely don't like this candle showing me selling pressure, but I see you didn't take it to the long side here against the wick. You waited for a breakout and you took it for a break of the high of the day. I assume this was a play for a break of the high of the day, right? It definitely wasn't for a huge trend trade. And that's how you traded it. You traded it once it broke the high of the day, and you exited all out at the target or at the daily level up there. Let's take a look at the 1-minute chart. That's it. This is amazing. The 1-minute chart looks amazing, right? sort of an ABCD pattern, a break of the high of the day, starting to get momentum for the break of the high of the day, and you're exiting all out of the daily level. This is well executed trade. Yes, it looks like it is extended, right? On the 15-minute chart, the 5-minute chart is not looking really good. The 15 looks a little bit extended. The 30 looks good. You're going against the resistance area, but the best thing you did there is that resistance up there was your target, right? You went in for the break of the high of the day once it cleared the resistance area for a quick move with the volume. So yeah, really well executed, Walid. Denise, let's see what you traded on CCL. So CCL 30-minute chart, amazing for a short, right? Let me actually make it this way. I didn't think of that. Anyway, the 30-minute chart is not looking bad for a long or for a short. It's just going sideways. It broke up. At this stage, I actually would have been long biased depending on how what the smaller time frames are showing us. Then it's going down, breaking or making a new 30-minute low, which is a good short to the bottom side. This looks good for a 15-minute open range breakdown. Let's take a look at the 1-minute chart and the 5-minute chart. The 5-minute chart, this is a good candle right here, right? You're having a bullish candle followed by an engulfing. The engulfing candle is a weak sign, right? The next candle is a reverse hammer, which is also a weak sign. Then you're getting in for a breakdown. Really good patience right there. I love that. Let's take a look at the 1-minute chart. Selling off on the very first candle. This pattern right here, I like it for open range breakout, right? 5-minute hammer with a good pattern, curling pattern on the 1-minute chart. Once it's breaking out, taking it to the long side, stop loss at the half of the range, and hopefully it's going up for a partial. Unfortunately, not a huge move. Coming back down, chopping around. The 5-minute chart showing us a good pattern. The 30-minute chart showing us a good pattern. The 15-minute chart showing us a good pattern. It's above all the moving average. You're taking it to the short side. I love that he waited here. Literally no reason to partial at the low when it's forming a pattern, which is a descending triangle. He waited for the breakdown. After the breakdown, a bear flag pattern, and then he just waited all the way down there. Really good job there. I love how much he waited. Yeah, I see that. Like this volume, you mean? Yeah, really good job holding on to it. Peter, let's see what you had right there. WKHS. Peter traded WKHS for a long. Was it a long or a short, Peter? I think it was a short, right? I bet it was a short. Long. Okay. I wouldn't have taken it to the long side. Would you? Could you tell me why? Yeah, first of all, this moving average. Remember that the moving average is an average. It could wick above it. The wicking above it doesn't mean that it broke it, right? It's just an average. The next thing, first candle is an indecision. Second candle is a reverse hammer, right? The 1-minute chart is not looking bad. I see that the 1-minute chart we're having a bearish engulfing sandwich, but for the bearish engulfing sandwich to be completed, you need to break on the 4th candle, right? You need to wait for this candle right here to break the high up here. This way it will be, this setup will be completed, but unfortunately it just broke down. On the 5-minute chart, I see what you wanted. The 5-minute chart definitely looked good for an open range breakout, but unfortunately the smaller time frames didn't support it. So we're having one last trade. There was someone who was supposed to post a chart on the off topic, but I think they didn't. Let's see if I can find it. Look. So guys, just for the future, make sure to post the charts in the off-topic chat so that we don't miss them. Now I see you tried to get into Apple for a descending triangle on the 15-minute chart and on the 5-minute chart. Now look at this. You could draw a pattern anytime on anything. Like only draw. If you can't draw a pattern, it doesn't mean that it is a pattern which is good or which is going to work out. You need to pay attention also to how the daily chart looks like. You need to pay attention to how the candles are looking like. If everything is supporting your pattern, then that's good. If not, just simply avoid it. Now look at this. You're having a high, you're having a low, you're having a high, you're having a low. Up until this moment, it's still downtrending, you're having a high. I wouldn't actually even call this a high. Right, it's just consolidating, but yeah, let it be a high, right? Still lower high right there, right? Higher low, it's coming back up for a breakout, you're taking it to the long side, which is not bad in my opinion. You waited for the best place to actually try to take it to the long side, but still, if you just draw the line right there, you're going into the moving average. You're going into the moving average, right? You're going against a support, against a resistance. For me to take these type of setups, I want them to penetrate all the moving averages for it to be clear, to be able to run, pull back, and then I take them to the long side. If I just decide to go against those moving averages, then I would trade them one of the two ways. Ways. But the first one is the resistance will be my target. The second one is I wait for it to trend. If it doesn't, it's not trending and it's bouncing off the resistance which I saw starts to go against me, I will just simply exit at break even in this case. Then you're trying to long it one more time. I'm not sure why you are trying to long it when it's clearly making lower high waves. I see that the 5-minute chart is looking bullish from the bottom because of all those wicks, but still it's not ready for a long. The daily chart is looking bullish. In my opinion, I would long it only once I see that it's starting to change the trend, making higher highs and higher lows. In this case, it's still looking weak to me, but I wouldn't short it as well because of how these wicks look like. I would assume that it could just simply drop down to this daily, to the low of the day, bounce and come back up. If I short it right there, my stop loss is the level where it bounced from. I can't tighten my stop loss, right? I can't put my stop loss within the range. It's either the high or no other place. I mean, up until this moment, like if I short it here, this could be my stop loss. But still, this is not a good risk to reward. So definitely not shorting it and not longing it. That would be it for me. So yeah, that's it for today, guys. We're actually out of time. I'll take a look at Roku right now. Let's do this, closing. Oh my god, a lot of charts to close actually. Let's do this way. Okay, I can't even do that way. Close. And a lot of browsers. Oh my god, that's too much. Okay, Roku. Take a look at Roku. Would I take Roku for a reversal? No, I wouldn't take it for a reversal. The daily chart is looking so strong. It looks like it wants to break out. This is a really good uptrend. I'm not sure I would take it to the short side. Look at this move. It could run a lot after breakouts. It could run, right? Usually it's running. Today it did $5 or $6 move, but it could make up to $10, $11 move. I think it still has something in its pocket. I'm not going to trade it for a reversal. And I offer a short. No, I wouldn't. It's interesting actually. This level right here is interesting. Is it the all-time high? It's not all-time high, but there is already. No, it's not all-time high. Yeah, this level is interesting, but it's not enough. I wouldn't short it right here. It could go for a scalp. If you mean for a scalp, not extreme reversal, below this level, below 2015, just to be safe around 2014, I could short it, but your target will be small. Not so small actually, 10 cents is not bad. Yeah, I think below this level, it could be interesting for short, but it's not, now as it's holding it, I wouldn't do that, right? Once it's breaking it, at least 2014 or 2015, it could be a decent short with a target 2005. There it is, it's breaking it, like this is decent around here for just a scalp move, not a extreme reversal. Let's take a look at it. Or yeah, we could actually finish just looking at it in the chat room, right? Just to save the time, some time. Thor will be there in the chat room now. If you guys have any questions, feel free to ask me or just email me ayman@beerbletraders.com and we'll comment on Tesla. Tesla could be a reversal, it's not bad, but it also could be a long around here. It's not bad for short as well. Yeah, Tesla is not bad to any direction, like a long or a short, but it's not ready for a short in my opinion. It's sitting above a flat area at 424.50 below that area, it could be interesting. But the daily chart is also looking strong on this thing. Alright guys, have a good day, and I'll talk to you later.